I want to talk about kind of big picture. I want to step back and look at the just kind of where we stand in retail right now, why I think that we're headed into an apparel depression. If you take a look at this slide here, you can see this is, we think in terms of these huge mega cycles in retail. Mega cycles meaning 30, 40 plus year cycles. And we can date back to 1858 when Macy's opened up its first store. That started the first mega cycle. I'm not going to go through all of them right now. It would take way too much time and probably bore you. But we're right now ending the fourth mega cycle of retail, and we're going into number 5. And number 5 starts with an apparel depression. Why did that happen? We've gone through a 25-year time period of apparel deflation. And if we flip up 1 or 2 slides here, Josephine, you can actually see there was this time period from 1994 through 2004 where there was a change in our trade regulations that basically allowed us to start importing apparel en masse from anywhere in the world. There's a whole lot behind that, but just trust me on it. At that point in time, we started to see prices come all the way down. Imports from China went all the way up. Same thing with Vietnam and with Indonesia and a few of the key countries out there, but China and Vietnam are really your 2 big horses. When you see what happened over that time period, on this next slide, you can see that the average price of what we paid for a piece of apparel went from 25 bucks down to 10 bucks. At the same point in time, what we did is we simply bought more stuff and we just wear it less. So the fact of the matter is our per capita unit consumption went from 25 units per year, which sounds like a reasonable number, up to 86. We buy 86 units of apparel per capita per year. Granted, a pair of socks counts as 2, but still, we're talking massive numbers here, and it went up almost by a factor of 3 over this deflationary time period. If you look at what that caused, it's on this next slide, which shows apparel square footage back to 1900. And it was fairly balanced, grew at a very steady pace through the first 4 megacycles of retail, actually the first 3 megacycles of retail. Come the 4th megacycle, we had this massive spike up, and now we're sitting at about 12, 13 billion square feet of square footage. The key driver here is the growth of the strip center. That's that black bar there. Strip center, this is where you have, you know, Kohl's, Bed Bath & Beyond, or Blood Bath & Beyond as I call it. You got your Best Buy, your off-price channels. These were essentially born during this big mega cycle, and it's what really drove new consumption. Now, that's not a huge problem right now. It's a little bit of a problem because economics for anyone who sells apparel and most other things are just not good. But the big problem comes now as we enter Retail 5.0, and this is as e-commerce really ramps up. As you look at e-com, it has a square footage equivalent de facto. So if you go ahead and you buy something online, that actually counts as square footage. How I'm doing the math, we're currently at 44 square feet per capita. A number that's thrown around is we're at 30 to 33 square feet per cap. That's wrong. It's actually 44, which is by far and away the highest in the world. The bear case here is that as e-commerce grows from 14% of total retail sales up to somewhere in the low 30s, that it adds an incremental 12 billion square feet of space, and we get up to 76 square feet per cap. What does that mean? It means a mother of a bankruptcy cycle. And if you look at this slide here, you can actually see, you know, it's stepped up to a huge extent over the past 2 to 3 years. Already this year we surpassed last year, and we still have a couple of months left to go, and there's still a couple of retailers on the docket who look like they could go under and could go under soon. If you look at the types of retailers who are going bankrupt, It's no surprise. It's apparel. This is your apparel depression. It's fairly balanced in outdoor and grocery, electronics, music, fragrance, jewelry, toys, even guns. But the big problem is really apparel, where you've seen well over half of total bankruptcies happen. The punchline here is that you've got about 20 to 40% of apparel square footage has to go away over a 5-year period just to maintain the horrible economics that we're currently living with right now. We're not going to see that many stores go away, so that means the pressure is going to intensify, margins are going to go down, and there's going to be a lot more shorts than longs here. Ultimately, you got apparel that's headed into a depression. It's actually in one right now.